Good morning, you're watching Market Cafe on ET Now with me, Somit Sarkar, and my co-anchor, Ankita Saxena. First up, let's go across to Ankita to understand how the cues coming in from the US market. Some positive signs, Ankita?
Yes, absolutely, Somit. Yesterday, the Fed released its minutes, and on the back of that, the markets seem to be rejoicing. Looks like they had already factored in what the Fed was about to say. The Federal Reserve officials, it seemed like they are committed to fighting inflation and expect higher interest rates to remain in place until more economic data provides them confidence that inflation was on a sustained downward path to about 2%, which of course is likely to take some time. But it was clear largely that no FOMC member expects rate cuts in 2023 anytime soon, despite the market pricing in. The markets currently are pricing in a likelihood of rate increases totaling a 0.5 to 0.75 percentage points before pausing to evaluate the impact of the hikes that it will have on the economy. Now, stocks closed higher on Wednesday after a choppy trading session. The Dow Jones Industrial Average rose 133 points or 0.4%. The S&P 500 climbed 0.7%, and the Nasdaq Composite was up 0.6% in trades. Now, the important thing to note is that the bond yields were lower even as the Fed reiterated that the rates would move higher this year. Now, all three indices notched their first positive close of the year, breaking the 2 consecutive days of losses after rallying from a negative territory in the afternoon. So, a rather choppy trading session that we saw yesterday. European markets also closed higher on Wednesday as inflation data of France and Germany indicated that consumer price increases across the Eurozone are now slowing. So, positive data coming in from France and Germany on inflation. The Pan-European Stock 600 closed up almost 1.5%. DAX and CAC were up to 2% in trade on the back of the inflation data that came out from these two countries, and the FTSE was up 0.4% in trade. So that was the roundup of US and the European markets. Somit, what was the impact on crude?
Well, on the commodity side, if you see Brent crude now, it must be trading a bit higher on trade currently, but yesterday it was down around 5%. And if you see for the first two trading sessions of the calendar year 2023, the crude was down around 10%, which is the worst trading start that crude has seen since 1991. And this is purely on the back of the fact that there are demand concerns which are linked to the global economic slowdown and because of rising COVID-19 cases in China, which has also led to a fall in the crude oil prices, specifically for Brent crude. If you see, when it comes to gas prices in US market, the gas prices remain largely stable at around $4 to $4.1 per MMBTU, but it was the European market where we had seen a 10% slump in the gas prices, and with this, the benchmark has erased all the gains that it had made last year. Last year, if you remember, it also touched its record high in the summer because of fuel shortage coming in post the Russia-Ukraine war which started. However, because of the fact that the weather is expected to be milder, in fact, there is no fresh cold winds expected until the mid of February, which has led to this fall in the gas prices when it comes to the European market. And when it comes to gold, lastly, if you see, gold has continued to hovering around $1,850 mark, and this is and it also touched its 7-month high on Wednesday after the minutes of Federal Reserve, Federal Reserve's last meeting, if you see, showed that policymakers continue to remain committed to fighting inflation, but they also agreed that going forward there could be slower rate hikes in 2023. But on this fact, gold continues to remain at a 7-month high and is currently trading around the $1,850 per ounce mark currently in the market.
Right. Now, quickly, let's just discuss what the Fed had to say. The minutes were released yesterday. Now, in details, minutes of the latest Fed meeting showed that no official anticipated any rate cut in 2023, as we discussed. However, they agreed that the central bank should slow the pace of its aggressive rate hikes. This would allow them to check on the progress of inflation, unemployment, and increase cost of credit in a gradual way. Now, in order to limit the risk to the economic growth, they want that inflation risks still remained and stressed on their commitment to bring inflation back to the 2% target.
In China, if you see, the regulators have approved a plan by billionaire Jack Ma's and group company to raise close to $1.5 billion for its consumer unit. Now, the group previously had its own IPO plans scuttled by the regulatory concerns. Now, Ant was also told at the time that it had to revamp its various business lines. Now, the Ant Group is yet to be awarded licenses to become a financial holding company.
And GM Motors posted 2.5% rise in US new vehicle sales in 2022. The company took the crown from Japan's Toyota Motor Corp, aided by an easing of inventory shortages. The US automaker also posted strong demand of its cars and trucks. Meanwhile, Toyota has been hit acutely by parts shortage, which forced the automaker to cut its full-year production target in November.
Well, Salesforce said it plans to cut jobs by around 10% and close some of the offices. Now, this is after a rapid pandemic hiring left it with bloated workforce amid an economic slowdown. Now, the cloud-based software firm said the job cuts would lead to about 1.4 billion to 2.1 billion US dollars in charges, and this is after the company from Meta to Amazon slashed thousands of jobs last year.
UK PM Rishi Sunak has shared a 5-point plan with the nation for the new year. He is looking to curtail inflation, push the economy towards growth. Sunak also said that he wants to bring down debt, reduce waiting lists, and keep a check on the boats.
Well, the XBB 1.5 Omicron subvariant is the most contagious version of COVID-19 yet, but it does not appear to make people sicker according to the World Health Organization. Now, the new COVID subvariant is causing some concerns in the US, where it is spreading rapidly. Now, the variant is yet to another offshoot of the globally dominant Omicron COVID variant.
And at Times Network, we are always looking to create investor awareness and make financial matters simpler for our viewers. Now, keeping up with our values, we present the second season of Nivesh Ke Fande. On this edition, we take a deep dive into the world of index funds. Let's take a look at this.
The pandemic has seen a number of Indians turn to the financial market to invest their wealth.
Yes, but many have wanted to follow a passive route of investing.
Absolutely. And they have been able to do so by investing in index mutual funds. But Aisha, how does one know if they are investing in an index fund or actively managed fund?
Well, it's quite simple. Index funds mimic a stock market index like the NSE Nifty 50 or the BSE Sensex. So your investments are only in the stocks that are part of the index.
And the investments are made in stocks, replicating the same weightage that they have been in the index against which the funds are benchmarked. And since the fund manager just has to replicate the stock composition of the index, the expense ratio is quite low as compared to actively managed funds.
But Nikunj, while a low expense ratio is ideal, investors should also check the tracking error of the index fund before they invest in it.
Yes, a low tracking error shows that index funds returns relative to its benchmark do not vary much, which is a good thing.
Nikunj, another benefit of investing in index funds is that investors get access to diversification.
Right, since the index fund replicates the index, diversification is built into the system.
And if someone is bullish on the long-term prospects of the index, then an index fund is a very simple and easy route to stay invested towards that belief.
Investors can consider adding index funds to their portfolio, but only after consulting with their financial advisor.
That's all in this edition of Nivesh Ke Fande, where today we were talking about index funds. Stay tuned for more such investment insights.
Moving on, good news continues for India as high-frequency indicators remain upbeat, from PMI expansion to robust tax collections and rising air traffic. In fact, traffic on both land and air. How is the state of the economy? Harsh joins us with more details on the same.
When I'm looking at the latest PMI numbers for December as well, the growth and the expansion has been quite robust above the typical averages. In fact, the average is 53.7 for manufacturing, which is currently sitting extremely pretty at 57.8. And for services, it's at 53.4, and currently services is sitting at 58.5. So very strong PMI continues. That shows the robustness in the economy. Moving quickly on to tax collections. Tax collections also continue to remain extremely solid, extremely robust. We're seeing gross tax collections higher by 18%. This is April to October data. Both corporate income tax as well as personal income tax, on both fronts there's very solid growth. And mind you, there was 9% GTR, which is gross tax revenue collection growth, which was penciled in last year. So this is nearly double of that, 9.5% to be absolutely accurate there. But moving quickly on to even the GST data too has seen significant expansion, 27% year-on-year growth in GST all the way through October, and you can see that steadily remained above that 1.4 lakh crore mark. Extremely impressive even in terms of GST collections. And banking sector credit growth as well on the back of that has remained very good. In fact, banking sector credit growth, latest numbers for November has come in at 17.5%+, and it's remained above that 11% mark since April of this year, as you can see on your screen there. Quickly moving on, we look at how the electricity consumption too has moved, 10% growth in electricity consumption. We're looking at even domestic air traffic, which is higher by 10% year-on-year. International air traffic too up 13% year-on-year. So across the board, high frequency indicators continue to show an uptick. When I'm looking at even the road toll data, extremely strong road toll data that is coming through, 34% up year-on-year, which is the highest road toll collection data which has come in December of 2022. Even a 6% sequential expansion when I'm looking at it month on month for the month of December. Across the board, very strong data coming through. In terms of UPI transactions, showing underlying consumption as well. Transactions in terms of number have gone up by 7% on a month-on-month basis at 782 crore transactions in UPI, and 8% in value. Again, both of these are at record highs. So currently, everything is a buzz.
Well, that's some good economic data coming out of India. So India's growth story and outperformance story continues. Now, government may also extend the ambit of Ayushman Bharat scheme to include senior citizens and people above poverty line in the forthcoming budget. Now, currently the scheme covers only below poverty line people. ET now has learned from sources that the budget will announce health insurance for all, which is a great masterstroke perhaps before the 2024 parliamentary elections. My colleague Anurag Shah has more details on this. Let's go across to him.
Upcoming union budget would be last full-fledged budget of union government before 2024 election, and in upcoming budget there will be series of announcements for different sections of society. And as per our sources, in upcoming budget government may increase the scope of Ayushman Bharat health insurance scheme. Presently Ayushman Bharat health insurance scheme cover 50 crore people of below poverty line, that is around 10 crore family. But in budget government may announce the increased coverage of Ayushman Bharat scheme to senior citizen and to middle class people also, because presently the government also want to increase the penetration of insurance, and the missing middle is a missing link for the coverage of insurance. So if the scope of Ayushman Bharat scheme is increased to senior citizen and the middle class also, so the penetration of insurance will increase, and the healthcare services to the all section of society will also increase. For the coverage of senior citizens and for middle class or people who are not part of BPL family, there will be a certain amount of insurance premium will be charged by government, and rest will be contributed by government only. So this will be a very big announcement as far as insurance coverage is related, and as per our sources, this will be announced in upcoming budget.
Well, from insurance to startups now, where reports are emerging that edtech startup Byju's founder is looking to raise funds in order to increase his stake in the company to as much as 40%. Reports suggest that funding to finance the company is looking to funding to finance the stake repurchases, which could amount to as much as 15% of the firm. The Byju's was valued at close to $22 billion the last time it raised funds. However, if this buyback happens, it may be at a lower valuation.
And at Time Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Keeping up with our values, We present the second edition of Nivesh Ke Funde. On this edition, we focus on the differences between direct equity investment and investing in mutual funds. Let's take a look at this.
Hello and welcome to another edition of Nivesh Ke Funde. You know, Avan, at times investors cannot decide whether they should invest directly in equities or invest via mutual funds.
Yes, Nikunj, that can happen. So today, let's talk about how they're different and, more importantly, which kind of investors they're suited for.
Let's start with direct equity. These are what we usually call shares. They allow an investor to own portion of the company, or they can be a part owner of a business.
Right. And mutual funds are vehicles to invest in different asset classes. Mutual funds invest in equities, bonds, government securities, or other fixed income assets based on what kind of a mutual fund it is.
So importantly, the difference is that in equities, the investor is deciding which shares to invest in, while in mutual funds, there is a fund manager, an expert who will take those decisions.
Right, and the manager, along with the research team of the mutual fund company, take informed decisions on where to invest the investor's money.
Now, before investing in mutual funds, an investor can decide the category of the mutual fund that they can also choose and that they are comfortable with, and the asset, the companies that the mutual fund is investing in.
For investors that are new to investing, mutual funds are an ideal way to start their investing journey, since the fund manager is constantly tracking their investments to help them get optimum returns.
Another benefit of investing in mutual fund is that an investor's money get invested across large number of securities, even when investing in a single mutual fund.
Yes, and that way the risk undertaken is relatively minimized as opposed to when you invest in the shares of a particular company or companies.
So I want to take this point a little further, Avan. So by investing in mutual funds, investor will get exposure to large number of securities, and the best part is that that can be done at a very low investment amount.
Exactly, Nikunj. With as low as just 100 rupees, which is actually difficult to achieve when you're investing directly in equities.
Yes, another point of difference is to invest in equities, an investor needs to have a demat account.
True. And for mutual funds, the investor does not even need to open a demat account.
And so now you know the difference between investing directly in equities and investing via mutual fund.
Well, at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Now, keeping up with our values, we present the second season of Nivesh Ke Funde. On this edition, we discuss the different kinds of risk involved in mutual fund investing. Listen into it.
Welcome to another edition of Nivesh Ke Funde. Avan, you know, whenever we invest our hard-earned money, we always analyze the risk versus the return.
Absolutely. Every investment avenue has some risk involved. It's just about knowing the level of risk and whether one's actually comfortable with that.
So today, let's talk about the risks involved in mutual fund investing. While they do provide a plethora of assets to invest in, what are some of the key risks that mutual funds carry?
Well, firstly, it's important to note that mutual funds do not guarantee or assure returns. This is because some of the risks that they are subject to are market risks.
Equity mutual funds are investing in stock markets, and the markets are inherently volatile. So inadvertently, mutual funds also face the risk of being impacted by market turmoil.
Another risk is concentration risk. When most of an investor's portfolio is concentrated in a particular sector, if anything impacts that sector, it will adversely impact the investor's portfolio.
That's why it's very important to diversify one's financial portfolio and not have all of one's eggs in one basket.
Another important risk that mutual funds face is the interest rate risk. When interest rates increase, debt mutual funds usually get impacted negatively.
Then there is, of course, the liquidity risk. If, due to some reason, a financial asset is no longer easy to sell as before, it reduces liquidity of that particular asset and realization of fair price becomes less likely.
And further, there's also the credit risk, which is when the mutual fund scheme has invested in a fixed income security and there's a default by the borrower or a downgrade in its ratings.
These are some of the main risks associated with mutual funds. But we must always remember that the great investor Warren Buffett says about managing risks.
Yes, he famously did say that risk comes from not knowing what you're doing. So it's important to know all the risks and then invest.
That's all in this edition of Nivesh Ke Funde. See you next time.
नए भारत का नया उत्तर प्रदेश, एक्सप्रेस प्रदेश, उत्तर प्रदेश। देश में विशाल एक्सप्रेसवे नेटवर्क वाला राज्य, 5 अंतर्राष्ट्रीय एयरपोर्ट, नेक्स्ट जनरेशन इंफ्रास्ट्रक्चर, डिफेंस इंडस्ट्रियल कॉरिडोर और पर्यटन में असीम अवसरों वाले सबसे बड़े बाजार। उत्तर प्रदेश में 10 से 12 फरवरी को आयोजित ग्लोबल इन्वेस्टर्स समिट 2023 में आपका स्वागत है। आइए ट्रिपल-T यानी ट्रेड, टेक्नोलॉजी और टूरिज्म में अपार संभावनाओं वाले नए भारत के ग्रोथ इंजन उत्तर प्रदेश में निवेश करें।
बिस्लरी देना
जरा देख के लियो।
हाँ पता है, ज्यादा चपड़ चपड़ मत कर।
लो भाई साहब बिस्लरी। अबे चंपकलाल, हर पानी की बोतल बिस्लरी ना होवे।
समझदार बिस्लरी पीते हैं।
India's future ready state, Madhya Pradesh is gearing up once again for the Global Investors Summit on 11th and 12th of January 2023. Be it strategic location, vast industrial land bank, state-of-the-art infrastructure, surplus power supply, abundant water supply, skilled manpower, peaceful industrial environment, Madhya Pradesh has it all. Chief Minister Shivraj Singh Chauhan, being at the helm of affairs, is leaving no stone unturned to make Madhya Pradesh the preferred choice for investors. For the right environment to boost your business, look no further. Under the able leadership of Prime Minister Narendra Modi, Chief Minister Shivraj Singh Chauhan aims to make Madhya Pradesh the future-ready state. Come, be a part of the future. Invest Madhya Pradesh Global Investors Summit. For more information, visit investmp.in.
जहाँ एक नॉर्मल सा मार्कर खींच देता है सच और झूठ के बीच में लकीर, जहाँ 3x4 के व्हाइट बोर्ड पर उभर आते हैं बड़े बड़ों के काले दाग और मिट जाती हैं गलत फहमियां सही तर्क से। उस जगह को आप क्या कहेंगे?
नमस्कार, न्यूज की पाठशाला में आप सभी का स्वागत है। मैं हूं सुशांत सिन्हा।
न्यूज की पाठशाला,
यहाँ सबकी क्लास लगती है।
नए भारत का नया उत्तर प्रदेश, एक्सप्रेस प्रदेश, उत्तर प्रदेश। देश में विशाल एक्सप्रेसवे नेटवर्क वाला राज्य, 5 अंतर्राष्ट्रीय एयरपोर्ट, नेक्स्ट जनरेशन इंफ्रास्ट्रक्चर, डिफेंस इंडस्ट्रियल कॉरिडोर और पर्यटन में असीम अवसरों वाले सबसे बड़े बाजार। उत्तर प्रदेश में 10 से 12 फरवरी को आयोजित ग्लोबल इन्वेस्टर्स समिट 2023 में आपका स्वागत है। आइए ट्रिपल-T यानी ट्रेड, टेक्नोलॉजी और टूरिज्म में अपार संभावनाओं वाले नए भारत के ग्रोथ इंजन उत्तर प्रदेश में निवेश करें।
Welcome back. You're watching Market Cafe. Now, let's quickly mark the Asia markets. As I'm looking, Asian markets have totally taken a cue from the US markets and have opened up in the green. Nikkei is up 0.4%, and Shanghai is also up more than 0.5%, up 0.7% in trade. Hang Seng is up more than 1.5%. It has eased off a little. It was up 2%, has come down, inched lower a little, and is now up 1.5%. Kospi is up 0.3%, has also eased a bit. It was up 0.4%, is now up 0.3%. SGX Nifty, as you can see on your screen, has also come down a little. It was up 0.2%, is now up 0.1%. If you look at the US futures also, Dow and S&P 500 both are up more than 0.5% in trade. So all of these global cues are hinting towards a good positive start for the Indian markets as well.
Well, moving on, Satya Nadella, the chairman and CEO of Microsoft, spoke to Economic Times and said that Microsoft is building global products in India now. He also added that Microsoft's investment in India is significant. He believes that it is important for MNCs to create local surplus in the countries they are operating in. He also praised the use of digital technology in India across various business sectors.
Well, moving on, we have Ashesha in the studio with us with all the stocks that you need to watch out in today's trade. Ashesha, take us through the stocks that we need to look out for in this session.
Yes, hi, good morning. So apart from the operational updates that have come in post-market hours, we will have some other stocks as well which will be in focus. First up, IRB Infra. Remember, this has been in focus for the last many trading sessions on account of the board meet that was scheduled to happen yesterday to consider stock split and subdivision, and the board has finally informed the exchanges that they have approved stock split in the ratio of 1:10, which means one share of 10 rupees each will be split into 10 shares of 1 rupees each. They've also informed the exchanges that this has been done to enhance liquidity, shareholder approval, memorandum of association amendment, and all that will happen any time before the 20th of February. SGVN will also be in focus, and that is because the company has received Union Cabinet approval for investment of 2,614 crores for company's 382 megawatt Sunni Dam hydro projects. On the account of the approval that has been received by the company, SGVN will also be in focus today. Also keep an eye out on Somai Ceramics on account of the block deal that took place yesterday, where PGIM India Mutual Fund bought this particular company 3 lakh shares at the price of 499 rupees per share. So on account of the block deal that took place yesterday, this one will also be in focus in today's trading session. Moving on to Tata Power then, where the company has gone ahead and informed the exchanges that the company has received order of Central Electricity Regulatory Commission in respect of Mundra plant of the company. They said that Central Electricity Regulatory Commission has allowed Tata Power compensation for emergency supplies of power that are being done from company's power plant in Gujarat that runs on imported coal. Apart from this, Likhita Infra will also be in focus on account of the order win. In fact, they have informed the exchanges that they won orders worth 457 crores in the last quarter, that is quarter 3. So on account of this order win that the company has informed the exchanges about, Likhita Infra will also be in focus today.
Well, thank you, Ashesha, for all those details. Moving on now, M&M Finance is one stock that would remain in focus because the RBI has lifted the curbs on the NBFC, which it had placed over its recovery through third-party agents. Now remember, the private lender was barred from carrying out any recovery through outsourcing arrangements after the death of a 22-year-old woman in Jharkhand who was being allegedly harassed by recovery agents. Let's go across to Ankur Mishra for more details on this.
Yes, Reserve Bank of India has lifted the curb on Mahindra & Mahindra Financial for recovery through outsourcing activities. That means Reserve Bank of India has allowed Mahindra Financial to use their third-party agents for recovery. Remember, there was a curb which was put in by the regulator after an incident in Jharkhand, which happened with a 22-year-old lady, in which due to third-party agents, the practices which were there, the alleged behavior led to the death of a 22-year-old woman, and after that regulator came into action and they had put in a ban on Mahindra Financial for using any third-party agents for recovery. However, the recovery continued through their own agents, and now after these curbs are now lifted, Mahindra Financial can use their own agents. In a rough idea, Mahindra Financial had earlier said that the company repossesses about 4,000 to 5,000 vehicles per month using the third-party agencies, and now since the ban is lifted, now they can use the third-party agents as well, so the business may go back to the normal.
And steady operational business performance for Marico is expected in the third quarter. However, the management says that the recovery in rural demand was not very visible as inflation risks continue to loom. My colleague Vinny gets all the highlights. Over to you, Vinny.
Absolutely. In terms of the Q3 update coming in from Marico, we are expecting a modest growth this time around. The company, in terms of growth, has said they're expecting a mid-single-digit volume growth. And obviously, let's not forget, in Q2, the management had said that, in terms of their volume growth guidance for the second half of the year has come to mid-single-digit. From previously, what was there was 8 to 10%. So in line with that, mid-single-digit volume growth is what the Indian business is expected to see. Other than that, consolidated revenue is expected to see a low single-digit growth. Overall, gross and operating margins are expected to see a slight bit of an improvement coming in this time around, as well as modest growth is expected also in the operating profits of the company. In terms of the demand trends, they've witnessed some improvement in terms of demand, while recovery in rural is not as much as we were expecting it to be, not as visible as the company was expecting it to because of the retail inflation. That is slight bit of a concern coming in terms of the rural demand. And overall, the demand in the sector has seen an improvement and improving mainly to the festive season as well as the oncoming and ongoing winter season that we've seen coming in as well. Performance in terms of the segment wise, Parachute has expected to see a low single-digit volume growth this time around, while Saffola franchisee has led the growth for the company this time around as well. Double-digit in terms of value growth, while Saffola Oil is posting a low teen volume growth this time, as well as Saffola Food continuing to see a strong run even in Q3 FY23. Value-added hair oils, that is VAHO segment, is expected to see a subdued growth, mainly tepid sentiment is what they've seen in rural areas as well as mass personal categories, which is impacting VAHO's growth going forward as well. And international business has continued to see a healthy growth momentum expected in high single digits. So 8 to 9% growth in constant currency terms is what we could expect from the international business for Marico as well. So all in all, slight improvement that we're seeing coming in this quarter.
Sticking with the Q3 updates, some more companies that have come in, Adani Ports and RBL Bank would also remain in focus, and Lisa will be giving us all those details.
Yes, so Adani Ports has updated on their cargo handling volumes for December. It was up 8% year on year at 25 million metric ton. If we see the 9 months performance for FY23, April to December, the volumes were up 8% year on year to 253 million metric ton. Well, moving on to RBL Bank, even they have updated on their Q3 performance, where the deposits and advances saw a double-digit growth. Deposits grew 11% on year basis, and sequentially it was up 3% at 81,746 crore. Advances also grew 14% year on year and 6% sequentially at 68,371 crore. CASA ratio was up 40 bips Q on Q at 36.6. Retail advances also grew 12% year on year and 7% sequentially, while wholesale advances grew 17% year on year and 5% sequentially. Well, the bank continues to focus on increasing its retail deposits share in its total deposit mix. As we can see that the retail deposits has the share stands at 42% as against 37%, which saw last year. Notably, the liquidity ratio has dipped to 144% this quarter versus 156% that was there last quarter.
All those details, Lisa. Let's quickly go across to Vamakshi, who's here with us in the studio. Vamakshi, what are the brokerage notes saying this morning? What are the stocks that we need to keep an eye out on?
Well, with the earnings season just around the corner, we have a brokerage note that has come in from Goldman Sachs on the FMCG space. Now, what they're saying is that the staples had begun outperforming the discretionary category in 2022, and this outperformance is expected to continue going ahead. Now, when we look at the 3-year volume CAGR for FMCG companies, that has started improving in the first half of FY23. And in fact, they're also expecting gross margins are well poised for a recovery in 2023. Now, GCPL and Titan are the two top picks, and the target price for GCPL is at 1,050 per share, while that for Titan is 3,175 per share. The next stock on our radar is ABB. We have a note coming in from Kotak, and what they're highlighting is that they're exploring the case for the European business calling. The case for ABB exporting motors to large Europe market is quite strong, and they're seeing shift towards common product platforms by ABB Global. So considering all these factors, Kotak has in fact gone ahead and upgraded its rating on ABB. They've given it a buy rating, target price of 3,100 per share. And lastly, we will be focusing on Reliance Industries after this note that has come in from JP Morgan. They've gone ahead and maintained an overweight rating, given a target price of 3,065 per share. Now, what they're saying is that in the second quarter of FY23, gross margins and EBITDA margins expanded sequentially and on a year-on-year basis, and that was mainly driven by stability in input prices. They are also forecasting consolidated revenue growth of nearly 2%, and in fact, the PAT growth is also expected to be flat year-on-year on account of a higher tax rate. So those were all the important brokerages that you need to keep on your radar for the trading session today.
Well, thank you, Amakshi, for all those details. And yet another company that has come out with its Q3 update, and that's Bajaj Finance, and it has reported a steady performance. In fact, if you see the company's deposits now that have jumped nearly 40% compared to last year, and the management has also said that the liquidity position remains strong. Upasana joins us with all those details.
Well, Bajaj Finance has come up with its Q3 FY23 update, and in terms of AUM, it stood at 2.3 lakh crores with an uptick of almost 27% on YoY basis, an uptick of almost 6% on quarter-on-quarter basis. Well, the AUM guidance, mind you, the company had given in the Q2, which is likely to remain in the range of 25 to 27%, is what the company had said in its Q2, and certainly it is in line with what the company had guided before. Well, talking about the new loans during Q3 FY23 were highest ever at 7.8 million versus 7.4 million on YoY basis versus 6.8 million on quarter-on-quarter basis. Well, talking about the deposit book, that also saw an uptick of almost 41% on YoY basis, and the company has also recorded highest ever quarterly increase in customer franchise of almost 3.1 million. Well, talking about the liquidity surplus, it also stood at 12,750 crores, and the company continues to remain well capitalized with a capital adequacy ratio of 25%. Well, the liquidity position of the company also remains quite strong, is what the company has said. Well, all in all, we are seeing a steady growth coming in from Bajaj Finance in its Q3 update.
Growth coming in from Bajaj Finance. That was the Q coming in for Q3. Moving on, RBI releases its annual report on the Ombudsman schemes for 2021 and 2022. The volume of complaints saw a rise of 9.3% with a total of 4 lakh complaints received. Now, of these, most complaints were received against the SBI among public sector banks, whereas Axis Bank received among private banks. My colleague Ankur Mishra joins in with more details on this.
Yes, in an annual report released on Ombudsman, Reserve Bank of India has said in the report that the volume of complaints has increased around 10%, to be precise 9.39% at 4,18,000, and that happened in the year 2021-22 over the last year. Apart from that, if you see the modes on why the complaints were made, the complaints relating in relation to digital modes were the highest, and that accounted for around 42% of the total complaints. If you talk about the banks which received the maximum complaints in that list as due to size, State Bank of India received maximum complaints of 35,106, out of which 22,506 were resolved through either mediation or conciliation. Similarly, among PSUs, Bank of Baroda also received around 7,700 complaints, and out of that 5,412 complaints were resolved either through mediation or conciliation. If you talk about private banks, and now this list is interesting because Axis Bank received the highest number of complaints among private lenders, and that amounted to 10,181 complaints, out of which 6,222 were resolved through conciliation. The second highest, and there is a big gap in between, among the private banks, complaints were from Bandhan Bank, which were 419, and out of that 245 were resolved through conciliation or mediation. Among NBFCs, if you talk, overall the number of complaints were 20,439 for the whole year, and the most amount of complaints were for non-adherence of fair practices code, which amounted for 62% overall.
Well, with earnings season starting off, IT sector will be the first one to come up with the numbers, and TCS will be coming off with the numbers on Jan 9. So what are analysts expecting? Well, they're expecting it Q3 of FY23 to be a seasonally weak quarter with muted revenue growth for these companies, and they're also saying that it is largely on the back of higher furloughs which were expected in high tech, BFSI and the retail sector. Now, the revenue growth is expected to be around 0 to 3% for large caps, and because of the cross-currency headwinds, they're also saying that the revenue growth would be at a 6-quarter low. When it comes to margins, the brokerages and analyst community believe that the EBIT margins might have bottomed out and there could be some improvement in the range of around 20 to 100 basis points on a sequential basis. And when it comes to guidance, they are not expecting any change for the FY23 guidance for the IT space. Now, for among the large caps, they're expecting HCL Tech numbers to be better than peers, and they're expecting a weak performance coming in from Tech Mahindra and Wipro. And when it comes to the LTI Mindtree, it will be the first quarter where they'll be reporting their numbers as a merged entity. Among mid-cap IT companies, if you see KPIT, Persistent are expected to report a strong set of numbers, while Emphasis numbers are expected to be weak in the third quarter of FY23. And the brokerages are also saying that for the entire calendar year, that is 2023, investor focus would largely depend upon how has been the demand and what is the commentary coming in on that front, what is the focus on growth and decline of IT budgets for the calendar year 2023, how has been the pace of decision making from the companies, how has been the attrition rate, what is the headcount trends coming in, and how has been the pipeline when it comes to order win for the IT companies. And lastly, buyback will also be one thing that the street would be keenly watching out when it comes to IT company earnings.
Right. And moving on quickly to news updates. According to the Wall Street Journal, Amazon is going to lay off more than 17,000 employees. The company is also planning to reduce its real estate holdings. And Twitter recently tweeted that it would relax its advertising policy on the platform in the US. It would align its advertising policy with television and other media outlets. This change would bring Twitter's policies closer to Meta's platform Facebook and Alphabet Inc.'s YouTube, which allow political advertising. And India and France are set to hold their 36th strategic dialogue today in New Delhi. The two countries are likely to discuss wide-ranging bilateral and global issues. The Indian side will be led by National Security Advisor Ajit Doval, while the French delegation will be led by Emmanuel Bon, diplomatic advisor to French President Emmanuel Macron.
Well, Western allies will supply armored battle vehicles to Ukraine, but they denied supplying heavier tanks requested by Ukraine. Now, the French President Macron has told Ukrainian President Zelensky that his government would send light armored combat vehicles to help its war effort. And lastly, Prime Minister Narendra Modi will be sharing his remarks at the All India Water Ministers meet on the theme Water Vision 2047 today. Now, this meet would bring together all the key policy makers to discuss ways to harness water resources for sustainable development.
And with that, we're completely out of time on this show, but you don't go anywhere. There's lots more action lined up on the other show, which is called The Market. Thank you so much for tuning in.